Hello and welcome to Buy Now, Sell Now. Happy Monday to you. This is ET Now and I'm Alex Matthew. Cheryl is joining me to take you through the next 1 hour. Let's quickly take you through how the markets are performing. And remember, we had quite the phenomenal close to the week for the markets last week on Friday, but we're starting the week with a bit of weakness, with a bit of selling. Let's first take a look at the benchmarks because it's not all gloom and doom. The Nifty 50 as of now trading with cuts of about 0.5%, with about 30 of those 50 stocks declining in trade. Quite a few pharma names though in the advances. In fact, in the top 10 you find quite a few of those pharma names featuring. But the broader markets, and this is what I was saying in terms of not all gloom and doom, the broader markets are outperforming the benchmarks yet again. And what that means is that the market breadth for the broader market is actually favoring the advances as things stand right now. We'll have to see whether that strength continues and builds momentum over the course of the day, or if it falls off. Because the thing is, we've entered the last week of expiry of the current session series rather, and there could be quite a lot of choppiness. That's what we've seen over the course of this entire series, and that might actually just get aggravated in the last 1 week or so. Now, among the sectoral gainers and losers, I mentioned that pharma stocks are in focus today, and indeed that is the index with the biggest gains as of now. The Nifty Realty Index is also doing quite well for itself, with gains of about 1% or so. Minor gains about 0.3% for the IT index and the FMCG index as well. So defensives in focus, defensives being bought today. But the others among the sectoral indices are actually trading quite weak, particularly the Nifty Bank, which is trading with cuts of over 1% as of now. But besides what's happening in the market, there's also been quite a lot of action over the past, couple of weeks at least in the primary markets, and that continues this week as well. But what happens is that you tend to focus on what is recent and you tend to forget what's happened over the last 12 months. So let's look at how the IPO market has been for the Indian markets in the last 12 months. Jayesh Khilnani is joining in to tell you all about that. Jayesh?
There's been a lot of activity in India's IPO market of late. What we have done over here is shown you that in the last 12 months, there have been 25 IPOs that have raised more than 35,000 crores on an aggregate basis, which each of them having an offer size of 50 crores. Let's also have a look at how these have performed on various time frames. And what we actually want to bring out over here is that the ones that have gained on the listing day itself have been as high as 80%, and this is the primary reason why investors or traders are being lured into this particular category. The ones that have gained since the listing till date have been as high as 84%, which is also a very high percentage number. But what I actually want to draw your attention to is the last number over here. In case you had not been subscribed to the IPO allotment and had gone out to purchase the shares on the day of the listing, there's a good 40% chance that there would have been capital erosion for yourself, because there have been 40% IPOs that have been below their listing day close itself. Also, if you have a look at how these have performed from their 52-week highs, there has been significant erosion that we have seen. The ones that have declined more than 40% have been as high as 3 IPOs. You have capital erosion of 20 to 40% for 7 of such IPOs that we are referring to, and 10 to 20% have been 8 in number, with the total being 18. Now remember that we started with 25 and 18 of them have declined more than 10% on a minimum basis. Not only that, if you have a look at how these have performed with respect to their 52-week lows, within the 10% of 52-week low, there have been approximately 50% such IPOs. So, conclusion being that good quality companies also chased at the wrong price could lead to significant wealth erosion.
All right, thank you for that, Jayesh. But let's talk about Majesco. That particular counter is in focus in today's trading session. If you look at the stock, it's up about 5% in trade, and on back of news that open offer by Aurum Platts IIT Private to public shareholders of the company for the open offer is for acquisition of up to 74.43 lakh shares at a price of 77 rupees per share. And to talk more on this, we are joined by Majesco's Managing Director, Farid Kazani. Good morning, Mr. Kazani. Thank you for joining us on ET Now. Tell us more about the open offer and actually what has triggered the open offer.
Good morning, and thank you for having me on the show. I can speak on behalf of the founders of Majesco Limited, who have apparently given a tremendous value to the shareholders of Majesco Limited. And as part of that journey, after evaluating multiple options, the founders have decided to cede control to Aurum Venture Group, which actually is a well-reputed organization that is proven its capability in the real estate development stage. And you all and shareholders would be very well aware that a significant part of our asset is the real estate in Mahape, and Aurum Ventures is actually a serious developer in that MMR region. So based on a decision that the founders have taken, this gives a tremendous exit value for shareholders based on the value creation that can happen going forward. However, as far as our earlier decision was to kind of consider distribution of money through dividend, but since there is an issue in terms of distributing that because of non-availability of free reserve, I think this is the best option that the founders and ultimately management has decided to offer to the shareholders. So overall, we think that this should benefit shareholders, and Aurum is the right fit party to kind of take on control of Majesco today.
Farid, Alex here, just wanted to, I think that my next question essentially ties into what you were saying about the initial plan, because I think a lot of questions being asked right now, investors wondering why that didn't take place. Can you take us through some of the details there? There was initially the plan, as I understand it, to monetize the real estate assets and then distribute. Why didn't that happen?
So, the real estate scenario is not that positive, and especially as the property that Majesco Limited owns is lying vacant. To be able to monetize that at the best and optimal value is going to be a long-drawn process. Knowing that as management, we do not have expertise at all in real estate management, okay, it was best to kind of get the right player who can actually be able to give the best value for the real estate that is there, which is roughly around 160,000 square feet in the Mahape region. As part of the process, the Aurum Ventures has acquired 14.78% of the promoter stake, which is the entire promoter stake in the company, and follows it up with an open offer of 26% at 77 rupees per share, which is significantly higher than the current market price. So overall, from a shareholder perspective, it's a good deal from being able to get the value within the company of the real estate that is lying there. It's a much better process. The other alternatives would have been going down a route which would have been either a capital reduction and subsequently monetizing the real estate and then going through a dissolution process, which would have been highly time-consuming for the company and also would have costed quite a bit. So I think this is a much better, quick, easy exit for shareholders who would like to exit at this point in time.
Mr. Farid, if there is a low acceptance, will the acquirer be willing to hike the open offer price, or do you think the 77 rupees per share is a fair value? No doubt it is at the premium of current market price.
No, I cannot speak on behalf of the acquirer at all, okay? I think if what has been released today in terms of a press or a notice to the exchange by the acquirer is a mandatory open offer of 26% based on the acquisition of 14.78% controlling stake of the founders. So the plans in terms of what are the other possible plans from the acquirer is not known to me at this point in time.
Okay, that's fair. You mentioned that the promoter group is selling its entire stake in the company. What does the shareholding pattern look post the deal?
So at this point in time, the promoters hold 14.78%, and the rest of the retail have the balance. Public shareholders have around 85%. Okay. Post this deal, Aurum will actually come in the shoes of the founders, and depending upon the acceptance ratio, okay, and whatever shares they get in the open offer, there will be obviously a change in the new promoter stake going forward.
Thank you for joining us on the show and giving us your quick take on the latest news flow that is coming on Aurum making an open offer for stake in the company. That was Mr. Farid Kazani, who is the managing director at Majesco. All right, on that note, we'll slip into a break in this edition of Market, I beg your pardon, Buy Now, Sell Now. But stay tuned. When we come back, we'll come back with your queries. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's take a look at the stocks that are actually moving in trade today and which are the stocks that are featuring in our BNSN cloud, a stock cloud for the day. So first up, I'll talk about Majesco. We had the management also join us just a short while back. That's Aurum Ventures gives an open offer to public shareholders of Majesco for acquiring 26% of public shareholding at 21.5%. A premium 77 rupees per share is that open offer price. Moving on, you have TCS also that is in focus today. They're set to give wage hikes to its employees across geographies starting April. This will be the second salary increment for TCS staff within 6 months. The other stock that is in focus is Tata Motors. You have Mark Listostera will not be joining the company as a chief executive and the managing director as announced earlier last month. And you have Gunter Butchek will continue to be the CEO and MD till June 30th. The other stock that is in focus is Power Grid. They signed a share purchase agreement with JP Power Ventures to acquire its 74% stake in JP Power Grid for 352 crore rupees. You have RailTel that is in focus. Also, they bagged some order and also they will be reporting their Q3 earnings today. Weber Global is in focus as board will be meeting today to consider stock split. Apart from that, you have a couple of stocks that are in focus. That is Alok Industries, Affle, CG Power as well, because Vanguard Group Emerging Markets Fund bought stake in these companies on Friday via a bulk deal. You also have Aurobindo Pharma that is in focus. CLSA has upgraded the stock, and on back of that, Aurobindo Pharma is a buzz. And UPL is the other stock that is in focus today on back of ET Now exclusive, where sources are saying that the UPL is planning to reduce $100 to $300 million of debt ahead of schedule. So these are the stocks that are in focus today and are part of BNSN stock cloud for the day. Get on board then our guests for today. We have Kunal Bothra as well as Vijay Chopra joining us. Good morning, gentlemen, and thank you for waiting by. Kunal, I'll come first to you. And straight up, what are your high risk and low risk ideas for our viewers today?
So good morning, Cheryl. I'll suggest a couple of mixed trades over here because the indices are showing a bit of a wobbly kind of a trend. Stock specific, yes, there's a lot of strength on individual names, but on the index front, there is still a bit of a I would say jitterness on the indices. So in that aspect, one buy and one sell. The first one is a sell recommendation. It's a sell on IndusInd Bank. Bank Nifty is the one which is under pressure. In fact, if you look at it relatively as well, the Bank Nifty has underperformed the benchmark Nifty in the last 6-7 days of this market correction. So I'm expecting the banking index and specifically a few of the names which have a slightly weaker chart structure to underperform. IndusInd Bank is one of the stocks which I would want to recommend as a sell. Short-term targets to be kept at approximately 950, stop loss at 1015. The second stock which I have is a Sun Pharma. Now, from the pharma index, I believe that many of these pharma stocks are showing signs of a revival. these stocks, and in fact, the index overall is forming a triple bullish RSI divergence where the prices have made a new low, but the RSIs apparently have made a higher high for themselves. Now, when you see such a divergence, set up in the index, it generally leads to recovery on a lot of individual components of stocks. So, I'm expecting Sun Pharma, which has bounced back from its major swing lows in the last couple of days, to hold up its previous support and gain higher from current levels. So, buy on Sun Pharma, targets to be kept at approximately 620, 625 range, and stop loss to be kept at 575.
All right, Sun Pharma doing well for itself in trade today, gaining about 2%. Let's go across to Vijay now. Vijay, good morning to you and thanks so much for waiting by. What are your ideas, your high risk and low risk ideas for our viewers today?
I too concur with Kunal, and I think that pharma is a great opportunity right now. And the way markets have corrected, and there is some kind of a jitteriness in the markets, and some kind of a some fear that we might fall because the bond yields have been increasing and the inflation has not been under bounds. So I would also recommend a few stocks from the pharma space and one from the FMCG. So I like Divi's Labs at these levels, about 34.30. I think that this stock can go up to 3600, and there could be a stop loss of 33.80 on Divi's Lab. I think that it's a great company, fantastic business in the APIs and the exports. So Divi's should do well. My other, I would say, a low risk idea would be ITC, presently trading at 222 to 23. This could be bought for a target of 240. There is a lot of demerger news and there's a buzz in the market. We really don't know when it will happen, but again, it's a great company at great valuations. So even long-term players can just keep on holding ITC for a decent amount of time, and I'm sure that there is money to be made. And my high-risk idea would be Wockhardt. Although we have seen some correction from 500 odd levels to 430 odd, so I would recommend Wockhardt a buy on Wockhardt at these levels around 445 for a target of 520, 530. Because again, pharma seemingly is good and the stock has corrected well, and I think that Wockhardt should do well because it looks strong on the charts as well.
All right, so those are the high risk and low risk ideas coming from our experts today. Let's move on and let's get on board our viewer queries. And first, our query is from Arogyam Swarna. He's saying that he's bought 20 shares of AstraZeneca at 4,110 rupees per share. He's saying that he can hold on for 1 to 2 years. He wants to know that whether he should add on dips as well. Kunal, I'll come first to you on AstraZeneca. We've seen a sharp decline from that buying price of AstraZeneca. Currently, the stock is trading around 3,700 odd rupees, if I'm to the 3,200 odd rupees. So what should our viewers do? Can we hold on to this particular counter for the next 1 to 2 years? Makes sense to add on dips?
Add on dips, but I think so. One of the important points is that whether this is the only pharma stock which the viewer has in his kitty, then there is a question mark that whether this is the only pharma stock which can do exceptionally well. Pharma stocks had a fantastic 2020, at least the second half of 2020, where many of these pharma stocks managed to give returns of 2x, 2.5x, and beyond that as well. Same was the case with AstraZeneca as well. I think from those lows of March 2020, when the stock was below 2,000 levels, it at one point climbed up to 4,500. So the run-up was pretty good. Now the stock is going through a corrective phase. But there is, these are the names, and specifically AstraZeneca are the ones which are, which do pretty well for a longer period of time. And then these stocks go through a time-wise correction. So the catch over here is that it's possible that the stock may consolidate and remain in a trading range for some more time. It's more prudent enough for investors and for viewers who are looking to buy these stocks and holding it from a longer term view. I think if your time horizon is more than 3 years or 5 years, then it makes a lot of sense to try and buy these stocks and chip into these names. As in how these stocks go through their routine 10 to 20 odd % correction. But if that's not the case, if your horizon is short term oriented, then I believe that holding on to these stocks may not provide you that kind of a strong returns on the upside. So I think it depends on the risk profile and the time frame of the of the viewer. If he's ready to hold on to it for at least the next 3 years plus, then I believe buy on dips on AstraZeneca makes a good sense even from current levels.
All right, so that's the technical view. Vijay, coming to you on the fundamentals though, this is something that our viewer says that they can hold for about 2 years and asking whether they should average at this price. Is that a good idea? 30% down from the start of the year. I'm talking about 2021.
Well, there have been problems with AstraZeneca jab, and we all know what kind of negative publicity has happened across the world. There have been clotting issues in certain countries. Certain countries have even banned AstraZeneca vaccine. So again, there are controversies, and if there is a unlimited timeline, I really don't know whether this PR exercise would take 1 year, 2 years, 3 years. I really don't know. But if he wants to stay in the pharma space, and he wants to stay in a company which is into vaccines, I think that Dr. Reddy's is a much better option at this point of time. He can make lost money, and even on the charts, this stock looks very good at 4,300 odd, and it has already corrected from 5,500. So I think that the lost money can be made in this counter, and Indian pharma companies are competitive. And mind you, we've been exporting our vaccine to over 76 countries, and Prime Minister Modi very thumpingly talked about it in his narrative lately. So I think that he can shift to Dr. Reddy's, leave AstraZeneca. We all make mistakes in the market, and we should accept it. Don't fight with the market. So get into a better stock, better company. And I think that Dr. Reddy's, we all know, is a very strong, fundamentally strong company with domestic business as a very good domestic business as well, and exports as well. So you're buying into a company which is into Indian pharmaceuticals, into it has a global presence, and of course into the vaccine. And I think that the efficacy of Dr. Reddy's vaccine along with Sputnik is very good, and I think that it should give a good response over a period of time. So get into Dr. Reddy's at these levels. I think that 5,300, 5,400 are coming soon, so you can make the lost money, and won't take much time.
The advice coming in on AstraZeneca. Let's go to the next question then. We've got Piyush Sarkar, who's written in, and he's bought Godrej Properties at a level of 1,465 per share. Coming to you first on this, Kunal, he's bought 45 shares. He's bought closer to the peak than otherwise, but the stock is making quite the sprint in today's session. His holding period is only for the next 2 to 3 months. What should he do?
Definitely average. I, for one, believe that the real estate cycle and the real estate sector overall is going through a big revival process. Godrej Properties has been one of the, I would say, first stocks in the sector to, not just move up higher, but sort of lead the way from the front in terms of the sector direction as well. So it was one of the first stocks to break past above its, multi-year resistance as well, multi-month, multi-quarter resistance as well. So I think in that aspect, it's a good stock to hold on. Yes, your entry price is at the higher end, but you can rectify and you can correct these if you try and use the corrections which come along the way, if you're investing into any kind of a stock. So I think in that aspect, Godrej Properties could be a good stock to hold on. But yes, I think you should look to average, maybe not at current levels, because the stock is already up some, I think 8 or 10% from its Friday's low, if I'm not wrong. But then I think the stock comes back to say a 1,300, 1,310 kind of a trading range. I think that's a good level for you to average further and then bring your cost price lower and keep on repeating that process if the stock goes through another 10 to 15% correction as well further.
All right. Vijay, what's your view coming in on Godrej Properties? We've seen realty counters rally quite a bit, and Godrej Properties also has been one of those counters. So what does it, what's the outlook rather for the next 2 to 3 months for this particular counter?
Well, I think on your channel, I had recommended this stock at about 950. And I am fairly bullish on the real estate cycle for the next few years. And I think Godrej Properties is one of the companies which is going to be a major beneficiaries. They've got some marquee projects. These projects, sell like hotcakes even in these markets. Whenever they launch a project, they are able to sell it, and there is no overhang of inventory in Godrej. And of course, the management is very good. There is no cash flow issue generally, which happens with builders, and even credit is available for a company like Godrej. Easy credit is available. So I would say that just stick on to the company, and I would say that we might see 1,800, 2,000 levels also coming on this counter. Just hang on. So don't have a view on real estate companies with 2 to 3 months perspective. it is not a flash in the pan. This sector is just started looking up. I think there's a long way to go. And all the big companies who are in the real estate space, maybe it's Godrej, PLF or Brigade Enterprises or Prestige or Oberoi Reality, all these companies should do well over a period of 1 to 2 years. So just keep on stay invested in this space and also the ancillary space around real estate. So I'm fairly bullish. So no need to panic or worry. Even if the stock falls comfortably, bite into the same. Just start nibbling at lower levels, and you'll make good money over a period of time. But again, 2 to 3 months perspective in real estate is not advisable.
Right, that's the view coming in from Vijay on the Godrej properties as well as the real estate sector, saying that he's pretty bullish on the real estate sector. It doesn't make sense to have a 2 to 3 month view for a particular sector which is just where the cycle is just turning. So have a longer term view and stay put in Godrej properties is the view coming in from Vijay. Let's get on board our next viewer query, and this is from Sri Kutan VP. He's saying that he's bought 20 shares of Bajaj Electricals at 970 rupees per share. Wants to know what's the short-term and the long-term view for this particular counter. Vijay, I'll come first to you on Bajaj Electricals. 970 rupees per share. 20 shares is what Sri Kutan has bought. If you see over the last 52 weeks, stellar rally coming in on Bajaj Electrical. So what's the outlook looking like now for this particular counter?
Well, I mentioned about the ancillary sectors or on ancillary companies of the real estate space. So Bajaj Electricals, Havells, these are some of the ancillary companies. Apart from that, Bajaj Electrical also has a lot of products in the white good space where people have started buying, and we have seen a sudden spurt, pent-up demand due to COVID, from August, September last year till Diwali, and even now we are seeing, this demand has gone well. So I think that stick around, and this stock has the potential of going up to 1100, 1200 again. So I think I'm fairly bullish on this company. The management is good. The product lines are good. They have a fantastic distribution channel. So what else do you want in a company like this? So, Bajaj Electrical, Havells, they both look very good to me. Just stick around. So don't panic, don't sell. I think that, it can touch 1200 as well.
That seems to be emerging like the theme for today's conversation, Kunal. Don't panic, don't get worried about corrections, and use them as opportunities. On the technicals though, is that the same advice that you would give?
So if I have to speak it on a very broader term, then Alex, I think we've had a fantastic last 6 months for the markets from I think September lows or October lows. And I think in that aspect, some sort of a correction is warranted. But sometimes you have to look at it from a more macro kind of an angle rather than move from a micro kind of an angle. So I think when I look at it on a macro basis, macro in the sense from a longer term basis, from a larger picture basis, I believe that this is a very strong bull market which we have going through, and we are bound to have some periodic sharp periods of corrections as well. So if someone can digest these kind of volatility and still hold on to those quality names, then I believe the rewards could be substantially higher from a longer term basis. Bajaj Electrical is one of the stocks in the same category, I believe. Yes, the stock had run up exceedingly well. I think the stock had a fantastic start towards 2021, rising up from levels of 700, 750 to even a level of 1000 or 1100, if I'm not wrong, in just a matter of 1 or 2 months. And post that, it's seeing a routine kind of a correction. So I believe it's a strong stock. The stock holds a lot of potential. It has done exceptionally well, more of a steady chart. So I think in that aspect, I would also advise that hold on to it from a longer term view. You have to have a strategy in which you can use these corrections as good averaging opportunities. So whether it's for Bajaj Electrical or whether it's for other quality large cap names as well, I think this is the best time to try and use the opportunity of corrections and build on to your investments on these individual names.
All right, that's the view coming in from Kunal as well on Bajaj Electricals. On that note, thank you Kunal as well as Vijay for joining us on the show, giving us your top picks as well as resolving the viewer queries. All right, let's move on and let's talk about the case that is going on in Delhi High Court. The Delhi High Court is hearing Future Group's appeal against single judge bench order. And the latest that my colleague Abhimanyu is picking up is that Delhi High Court has stated summons and penalty on Kishore Biyani as well as Future Group. Abhimanyu, take us through what's the latest coming on this particular case.
Well, it's certainly a relief for the Future Group and Kishore Biyani ahead of the March 18 single-judge bench order, which had imposed a penalty on him for not complying with the Singapore-based emergency arbitrator's order with respect to the contract with Amazon. The division bench of the High Court has stayed the March 18 single-judge bench order while staying the summons and penalty imposed on the Future Group and Kishore Biyani. Also, the High Court has sought a reply from Amazon on the appeal filed by the Future Group and is going to hear the case on the 30th of April, which of course is going to be after the Supreme Court is going to hear the case next on the 28th of April. The top court had earlier allowed NCLT to continue its proceedings with respect to the amalgamation proceedings between between Future Retail and the Reliance Group. However, the top court had made it clear that the final amalgamation order will not be passed till the top court allows the deal to proceed. However, the petition which was filed earlier by Amazon seeking the enforcement of the Singapore-based emergency arbitral order's validity in Indian jurisdiction, that was upheld by a single-judge bench of the High Court on the 18th of March. Subsequently, a penalty was also imposed on Kishore Biyani, which led to this appeal being filed before the division bench. And today's order clearly has stayed the single-judge bench order. So all eyes, of course, will now be on the top court and the hearing which will be conducted by the top court in the last week of April, which is going to have a bearing not only on the NCLT proceedings now, but also on the validity of the Singapore-based arbitral order in Indian jurisdiction.
Abhimanyu, thanks so much for keeping us up to speed with that developing story. On that note, we're slipping into a short break, but lots more on the other side, so do stay tuned.
The 7th edition of India's landmark economic forum is here. A mega convergence of the architects of India's future. India's golden decade will be shaped here. Watch it live as it happens. India Economic Conclave. It doesn't get any bigger.
Welcome back. You're watching Buy Now, Sell Now. Now, one of the areas that has generated a lot of investor interest in the recent past is the platforms that deal in F&B. And one of them is Zomato. We've heard recently reports that Zomato is in fact preparing to list on the exchanges here in India. And in fact, that the filing of its draft prospectus could happen as early as April. The company may be looking to raise as much as $650 million, and that's what we're hearing right now. They could finish listing in Mumbai by the end of September this year itself, so that's definitely one to watch out for. As of now, deliberations are underway, and so the details of that offer as to the size, as to when exactly this could take place could change over the coming months. But that is the big news in the IPO space. Of course, the IPO space as a whole has been red hot in the recent past, and here's Avan Dubash with the latest in that primary market.
Well, things have certainly been hot in the IPO market. You had Nazara Tech, which closed its IPO on the 19th of March, and a pretty phenomenal subscription number as well. In fact, the total IPO was subscribed about 175.4 times on the final day, with bids received for about 51.25 crore equity shares. This is against the issue size of about 29.2 lakh equity shares. The retail portion was subscribed 75.2 times, and that of the employees about 7.5 times. And do remember the non-institutional investors portion, well, that saw a phenomenal subscription, 389.9 times. And the institutional buyers of the QIBs had subscribed or bid for about 103.7 times. Remember, this is backed by Rakesh Jhunjhunwala, lots of benefits, enjoys leadership, strong market share, highly underpenetrated mobile gaming, a wide product portfolio, as well as very strong leadership. So all of that seems to be moving well. And then there's also Bbq Nation Hospitality. We'll be watching out for this one this week, set to open its IPO for subscription on the 24th of March. The price band is 498 to 500 per share. It's an issue of fresh shares of 180 crores and then an offer for sale of about 54.5 lakh equity shares, which is by a lot of the existing shareholders. They've reserved about 2 crore shares for the employees. The investors can bid for a minimum of 30 equity shares and then in multiples of 30 equity shares thereof. So we'll be watching out for this one as well. They're going to be using the proceeds for expansion of new restaurants, repaying their borrowings, as well as to the existing shareholders.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more news on the other side. Don't go anywhere.
The 7th edition of India's landmark economic forum is here. A mega convergence of the architects of India's future. India's golden decade will be shaped here. Watch it live as it happens. India Economic Conclave. It doesn't get any bigger.
Welcome back. You're watching Buy Now, Sell Now. Let's look at one of the stocks that has been in focus in the recent past and particularly today as well, BEML. It's running up on divestment hopes and it's the last day for submission of expressions of interest. The state-run firm is expected to have garnered multiple bids as the stock continues to scale new peaks this year. Ruchi Bhatia is joining in with the details there. Ruchi?
The government's privatization drive is moving full steam. In fact, we are given to understand that today is the last day for submission of expression of interest for Defence PSU BEML. Remember, the government is hoping that good interest will come in BEML. The roadshows were very successful from the government's end. We're given to understand that the government is looking to offload about 26% out of the 54.03% that it currently owns in the Defence PSU BEML. We're given to understand various domestic and foreign companies are in the fray for BEML. In fact, reports had earlier suggested that companies such as Bharat Forge, Ashok Leyland, Mahindra and Mahindra, Tata Motors could be in the fray and could bid for BEML. Having said that, the government's privatization drive is moving in full steam. We're given to understand besides BEML, many other profitable PSUs that have been in fray such as BPCL and Shipping Corp, they have of course now moved to stage 2. In BPCL, we're given to understand that due diligence is currently on and the government very soon is going to finalize a reserve price as well after the process of due diligence is over. In Shipping Corp, the transaction advisors are currently studying the companies that have given and submitted their expression of interest. We're given to understand the government is hoping a stellar response for BEML as well.
Well, with that, it's a wrap on this edition of Buy Now, Sell Now. It's a goodbye from Alex and myself. Thank you for watching.